Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of September 17th, 2012. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your market update. Well, if we look at the bond chart on the screen, we can see that we had a huge run-up in the bond on Thursday, which really dropped interest rates all the way back down to historic lows where they hit July 24th. So it was a great run on Thursday, unbelievable. But then Friday, the market kind of sold off, took some profit, so rates did tick back up, but still almost at all-time historic lows. Now, what caused this huge run-up after we had a sell-off on Tuesday and Wednesday? Well, on Thursday, the Federal Reserve, Ben Bernanke, announced that they would be instituting QE3 starting right away, and that is they're going to be buying mortgage-backed securities to the tune of $40 billion per month. What that's going to do is help keep interest rates low. Their goal is to keep interest rates low through 2014 to 2015. They already said they're going to keep the Fed funds rate. Now they're extending that out from 2014 to 2015. Keep interest rates low. So mortgage bonds rallied, stocks rallied, gold rallied. Well, everything rallied on Thursday on the news. And then Friday, mortgage bonds took a backseat as stock kept rallying, so they sold off that for some profit. So that was great news, but again, as you can see, once they institute QE3, we can see the stock market will take off at the expense of bonds, as we already saw right away on Friday. So rates could drift higher as the stock market continues to gain on the news of QE3. Now, over the long term, that rally will eventually fizzle as the economy is not doing good and we are not creating jobs. So the bond could come back. But short term, we are recommending locking your Delaware mortgage interest rates in at these all-time historic lows. Now, the other report we saw was the Producer Price Index came out at a 3-year high of 1.7%. Now, Producer Price Index is a measure of inflation at the wholesale level. Now, inflation is the enemy of bonds, so that's bad news for mortgage rates. The Feds are going to be monitoring that. If inflation kicks up, they will stop that QE3 bond buying program, because they do not want inflation. So we do need to watch that because that was a huge run-up. Now, what ran that up was basically the cost of fuel and food. Everything else has pretty much not been inflationary, just fuel and food. Now, conventional loan rates, you may have seen, even though the rates got better, that they're not as good if you're doing a 60-day lock or longer because of that increased guarantee fee we talked about last week that was instituted on conventional loans, which is Fannie and Freddie Mac loans. That fee comes in effect November 1st, so on locks 60 days or greater, they are already instituting that on your rate. So we mentioned that you would probably want to lock that in and close if you're refi. Another announcement by Fannie Mae, which is huge. Fannie Mae has made a revision to their DU Refi Plus program. That's for underwater homeowners who have loans before June 2009. They're basically bringing back a stated income program. If your payment is not going to increase by more than 20% on the DU Refi Plus program, instead of verifying your income, we can show that you have 12 months of payment, principal, interest, tax, and insurance in reserve in a bank account. So basically we can verify assets in lieu of income. More information on that in the blog if you want to look at that. And then the other big thing in the national news is the budget deficit financial cliff, which is going to happen January 1st, 2013 if Congress doesn't do something. There's mandatory tax increases that will go in effect. Basically, the Bush-era tax cuts will expire, so taxes will go up across the board. And then there's mandatory cuts to spending, which will take place across the board. If that happens, we will be thrown back into another recession, and unemployment will probably tick up to 9%. Unless Congress comes up with a different plan to change that, that is in place automatically happens. So if you think Congress should act, you can sign the Citizens Petition to fix the debt. There's a link for that in the blog post if you want to go there and check that out. Now, in the local news, we got the next free first-time homebuyer seminar in Newark this Saturday, September 22nd. And there's 2 sessions to choose from, 10 a.m. to noon or 1 p.m. to 3 p.m. That's in Newark at the Christiana Hilton Hotel, Saturday, September 22nd. And then we also have one coming up in Dover. That's Tuesday, September 25th, and that's from 6:30 p.m. to 8:30 p.m. in Dover at the Dover Sheraton Hotel. You can register for either one of those seminars by giving us a call at 302-703-0727, or you can register online, www.delawarehomebuyerSeminar.com. If you want to take advantage of these new DU Refi Plus guidelines, the stated income, feel free to give us a call in the office, 302-703-0727. We'll do a free refinance analysis for you and see if you qualify for the new guidelines. or you can apply online, www.prmidelaware.com. Look forward to seeing you next week.